On the next slide, we'll talk a little bit about home pricing. Again, Dave covered this previously and talked about some of the real challenges that are facing home buyers in the marketplace. It's not just the fact that interest rates are at 7%, some cases even higher. It's not just solely due to the fact that we are now at historically wide rent versus own gap in terms of the monthly cost of ownership versus the average rental rates, which that slide on prediction 3 did a great job of showing that example. I mean, those are certainly large drivers of the issue, but really what's keeping prices inflated at this point, we believe, is that no one's moving. I mean, there's a lot of folks that are locked into long-term fixed rate mortgages that are not at 6%, not at 7%. I mean, they're at 5%. In some cases, they're even lower. So there's a few reasons that are keeping people in their homes. That would be one of the biggest reasons, is that you're not running out to go pay an elevated price for a home and then replace it with a 7% mortgage when you've got a 4% rate at a much lower price that you're locked in at. There's also economic uncertainty, and Dave touched on a lot of the issues that are facing the country right now. But people are unlikely to move if they're concerned about losing their job. So we believe when the economy starts to rebound and see some firm footing and job growth really starts to ramp up in terms of new job formation in Q3 of 2024, that's when we believe people will start moving again. And what that will do is drive up the availability of supply and inventories. Home builders are doing their best to repopulate and build new supply. But as Dave mentioned, there's been a lot of articles written about this. I mean, right now we are still playing catch up from the lag from the GFC, and we're somewhere in the neighborhood of between 4.5 and 6 million homes of undersupply in this country, depending on which research piece you read. So we're not doing our part in terms of building new supply to meet the needs that will create some equilibrium in pricing. So we believe once the home buyer feels more confident about their economic prospects, they'll start to move, and this pricing will start to fall. Now, we do think that the pricing and home values will be felt universally across markets in the United States, but there's also likely to be more pronounced declines in the northern and western cities here in the U.S. that are still undergoing a pretty dramatic demographic shift that certainly started in COVID, but continues to this day.